three clear trends that we see for Indian capital markets, and we expect these trends to go on into 2025. The first one is essentially around the average deal size. 2024 saw an average IPO size of around $230 million, which is essentially around 80 plus IPOs garnering close to $20 billion. The same stats for 2023, you essentially have around less than $6 billion raised with around 57 IPOs, little over $100 million. So almost doubling of the IPO size, right? And this is something that we've seen across QIPs and blocks and other ECM products as well. And we see that trend going forward into 2025 very, very clearly. Incrementally, even in terms of oversubscription numbers. See, given the large sizes that we're seeing for the deals, the oversubscription numbers and listing gains have been a tad muted, but it's important to notice that the largest application monies that have come into any single IPO have come in 2024 with around $30 billion having coming in, right? And this is for IPOs like Bajaj Housing, Vari Energy, etc. The same number was around $20 billion for last year. And we see that, again, continuing going forward. The third point I want to make is in terms of FPI participation. See, in the anchor books that we've seen so far in 2024, FPIs have been around 46% of the book. Pertinent to note that even during October, November, when there was an overall FPI pullout from secondary markets, around $13 billion, FPIs were still participating in anchors, and that was at 47%. So clearly, long-term FPIs continue to support Indian IPOs, significant resilience at that. To my mind, these three trends will be clearly seen going forward into 2025.
What's the risk to your mind, Mahesh, as India garners more attention?
Two clear risks. First is growth, which is something that we've seen last quarter. But an accommodative monetary policy should assuage that to some extent, and we'll wait to see how that spurs growth going forward. The second point is in terms of liquidity itself, in terms of both FPI and domestic liquidity. But there are a couple of interesting points here. Increasingly, we are seeing India-dedicated pods being formed amongst global investors. In addition, there are a lot of India-dedicated FPIs that are setting up shop, which are seeing significant inflows into them. So at some level, the liquidity flows are getting buffered, not just by domestic liquidity, but by India-dedicated flows that are coming into FPIs. And that's a very, very healthy sign for India.